Hey, Stephanie Anderson, Certified Wealth Strategist with Pulse Financial Services and your financial coach here in the locker room after hours. And I'm here because we had an opportunity to make some great adjustments at halftime this weekend. And after I put together a 26-minute video illustrating all of your options, I thought, that doesn't seem very actionable. So here's me making an adjustment to my video on adjustments and letting you know that we're going to roll this out in 2 phases. The first phase is going to focus on the first D that you can impact when it comes to increasing cash flow in your household, right? So 3 Ds are debt, discretionary spending, and deductions. And we're going to focus today on debt. And then tomorrow, I'm going to put out the next video on discretionary spending and deductions. So get excited. You know your team. You know your players. You know your score. This is what you've worked for, folks. Now is the time to make the changes. Now is the time to adjust your playbook to put yourself in a more favorable financial position right now. So get excited. We're talking about debt. Have a pen and paper handy and go team. So let's talk about debt. Debt is owned by your creditors, right? And your creditors are on the spending side of the ball. They're players on the spending side of the ball. And a lot of people have this misconception that there is no wiggle room when it comes to your fixed payments, your fixed debt payments. And that's just not true. In fact, creditors have a vested interest in you continuing to pay them, because if you don't, then you default and then they sell your debt to a collection agency for a fraction of what it's worth. So it is in their best interest, and they have all kinds of tools and options to maintain that relationship with you and give you an opportunity to afford your payments. So when it comes to adjusting your fixed debt payments on a monthly basis, a lot of times all it requires is a little bit of legwork, a phone call in some cases. So we're going to talk about credit card and medical debt right now. And the reason we're going to start there is because a lot of times you can make changes with your payments by just talking to somebody on the phone. So with your credit card company, call them up, tell them, hey, I am struggling right now financially. I cannot afford this monthly payment. Whether you're somebody who pays your credit cards off every month, maybe they might be able to offer a 0% annual percentage rate over a 6 to 12 month period. So it gives you the flexibility to pay it off over several months instead of in this 1 month, and you don't have to pay that additional interest charge. Maybe you're somebody who pays a certain amount every month on the credit card balance that they've accrued over time, and maybe that's not going to work out for you. So let them know, hey, I can't afford this $550 payment this month. What can we do to work together and get that down so that I can pay you and then I can get back on my feet? And a lot of times they will put together a plan for you and say, okay, well, we're going to have to increase your interest a little bit, but we're going to be able to reduce your payment down to $400 a month instead of $550, and maybe it'll take you, an extra year and a half or so to pay it off, but we're looking to impact cash flow right now. So if your credit card company is saying, here's what we can do for you, and it accomplishes the goal, in a lot of cases, it is worthwhile taking on some additional interest, possibly a longer term, in exchange for a smaller monthly payment today. Medical bills are very similar. They don't typically include interest. Usually you can get medical financing interest-free, but you need to call and talk to them about it. You need to say, listen, I can't afford this entire medical bill right now. I need some help and I need to get on a payment plan. And I think it's even worth it to say, what's the longest term you can offer me? If it's interest-free, who cares? If they're going to give you 2 years to pay it off, that's going to be a much lower monthly payment than if they give you 6 months to pay it off. So just ask. It never hurts. What's the longest term I can pay this bill off over? And give yourself the lowest possible monthly fixed expense. So the first thing you want to do is look at cutting your monthly payment, okay? And you can do that with a phone call. The second thing you want to look at is consolidation. So a lot of times people have multiple credit cards and multiple medical bills. And usually you end up paying more on a monthly basis if you have 3 minimum payments versus 1 minimum payment, even if the dollar amount is the same, okay? So in this situation, you want to call up all your credit card companies and you want to say, hey, I want to consolidate. I want to transfer my other credit card balances over to this one. Can I do it? A. B, will you extend my credit line if that's necessary? And C, what would be my interest rate and how much would be my monthly payment? And a lot of times they're happy to take on the extra debt, right, from other credit card companies because now they're getting interest on that money as well. But a lot of times they're willing to work with you, and they'll say, yeah, I'll extend your credit limit a little bit. Let's pull over these additional balances and get you one lower monthly payment. Medical bills, same situation. A lot of times you can consolidate your multiple medical bills into one. Sometimes you can't. It depends on who's providing the care and if they're affiliated or not, but a lot of times you can. And the important takeaway is that you have to call and ask. Give yourself a couple days grace period before the payments due. Let them know, hey, I know this is due. I'm struggling. How can we work together to make sure that I can reasonably afford my payments that I owe to you? And I think you'll be amazed at the kind of response that you'll get. In most cases, companies and folks are willing and wanting to work with you. Now, the caveat is if you are somebody that is constantly late on your payments, if you are somebody who's constantly looking for ways to do this, or this is the 7th call like this that you've made to this company, they're not gonna be willing to work with you, right? So this is the situation where you've been a good citizen, just paying your bills all this time, and now you have a situation where it's not affordable, and I'm gonna call and ask for some grace, and oftentimes they will grant you that. So the second thing you're gonna wanna look at with credit card and medical bills is the opportunity to consolidate. Next, we're going to talk about student loan payments. And again, you're going to want to hop on the phone with your student loan company or companies. A lot of folks have multiple student loans. And what we're going to be looking to accomplish with this phone call is possibly an opportunity to refinance your terms or your interest rate. The goal is to reduce your monthly payment, and if we can get you a better interest rate, that can accomplish the goal. We can also potentially extend your term a little bit, which can reduce your monthly payments. So again, you're just going to want to get on the phone with these people and talk to them about those options. And then if you have multiple student loans, you're going to want to talk to them about consolidating. And just to illustrate how helpful a lot of these companies are being, and especially right now with the quarantine situation that we're dealing with and folks losing jobs and having to manage their finances in a much different environment, these companies are wanting to help us out. And I have a client who a couple of weeks ago, like literally 2-3 weeks ago, called up their student loan company. They had 5 loans with one company, and his goal was to reduce his monthly payment. And so he just said, hey, I have these 5 loans. Here's my interest rate for all of them. Here's how much I pay for all of them. What can I do to get a better rate, get a better payment? What are my options? And they gave him 3 options, a 4-year, a 7-year, and a 10-year loan. The 4 and the 7 year had higher monthly payments, which obviously didn't accomplish the goal. But the 10-year loan had lower monthly payments than what he was making on all 5 of those loans individually. It had a lower interest rate than what the average interest rate was across all the 5 of his loans. And it was a shorter term by 4 years. So like all the missions were accomplished with that one phone call. And I think he had to do, I think they might have had him go through a credit check and then sign some paperwork or maybe do an agreement over the phone or something like that. But refinancing for student loans is typically a little bit easier of a process than other types of refinancing. But that's the conversation that you're going to want to have with your student loan companies is how can I refi and get a better monthly payment? And then how can I consolidate if that's an option as well? So the last type of fixed payment that we are going to discuss are your mortgage payments or personal loan payments that you might be making. Basically, any type of debt that comes from a bank or a credit union for the most part. And your option to change those monthly payments is pretty much limited to refinancing. But the good news is we are in a very low rate environment right now. So it's a prime opportunity to do a refinance. And it does take a little bit of legwork for sure. You need to get a whole bunch of documentation, but the good news is too that we went and gathered all of that a couple weeks ago back from video 1 of this series. So you should have all of the information you need readily accessible to give to your new lender if you want to go down the path of refinancing. Refinancing can help lower your monthly payments, and it helps in a couple different ways. Number one, it can help by getting you a lower rate. So if you are on a 30-year loan right now and your rate's 4% and rates are now 3%, you can get a lower monthly payment by just having a lower rate. You also can extend your term again and get a lower monthly payment by having a lower rate and by taking maybe a loan that you have 25 years left to pay on instead of the full 30 and extend it back to a 30-year loan. And obviously we're taking a smaller balance from when you originally financed your home and we're spreading it across 5 more years, putting a lower interest rate in the deal. And then you have, in a lot of cases, a significantly lower monthly payment than what you're currently paying. And some people might say, oh, well, I don't really know if I want to add 5 more years back to my mortgage, which is a good mentality and a great point. And after you get through these tougher times, then you can start paying more on your principal and you can arrange to get back on the same amortization schedule that you were on prior to the refi. So mortgage, personal loans, you're going to want to have the conversation about refinancing to lower those monthly payments. So there you have it. These are some ways that you can reduce your fixed payments on your debt. If you are not 100% comfortable with this or confident in your ability to have these conversations, you can always shoot me an email at info@pulsefinancialservices.net. I'd be happy to walk you through the process. I'd be happy to hop on a call with you and your creditors to help guide that conversation. But the biggest piece of this, you guys, is you just have to make the call. And these people on the other end of the phone want to keep you paying them. So keep that in mind. They are going to be willing to work with you, and you just need to make the call. You need to make the phone call, you need to make the play call, and you need to help these creditors, these players on your spending side of the ball, move you closer to a win.